Okay, so I would like to welcome all of you to this new year, the new year 2021. And in this year, we're going to talk a lot about stocks because I will be investing in stocks. And I think initially there will be a £20,000 account on which I will buy stocks on using the setup one on the TradingView platform, what we have here. We're going to run our scanners. We'll select the charts, we'll add them to watch list, and then we will wait for them to trigger as setup one. And then we will let them run like this one.
So are you going ahead with TradeStation?
No. So the charting software is going to be TradingView. Scanning and charting all will be done on this. And then I'll have one account with IG, the spread betting. That will be a £20,000 account. We will spread bet. So 20,000 would give us 100K. So it will be 100K account, in other words.
With leverage.
Yeah.
Okay, yeah.
Leverage wise, right? So that will be one account that I will manage, and if the other two accounts, they are still in the process, if they come, then hopefully I will put those in either TradeStation, or I'm also thinking maybe eToro, maybe, you know.
You can try probably Think or Swim or probably Cobra King.
They don't do UK.
Outside US?
They don't do outside. Yeah, but we have others, E-Trade and stuff like that, and Lightspeed and this. But it depends. I mean, there is a possibility that somewhere in February or March, I might be looking into trading the gap and go and momentum stocks, which you do at the open.
Yeah.
So if I do that, then in that case I will be opening account with Lightspeed, and that will be a different thing. So this is the setup that we will be taking. Frank was apparently confused what was a setup one, but then I looked at his journal. He's just started, so obviously if you were clear on day one what is a setup one, then obviously you won't be joining, right? Would you? Like if you knew what is a setup one in a week, then everyone would trade setup one. Like everyone can see this, but not everyone would trade it. Isn't it, Sam?
Yep.
I mean, to you and me, it feels like, why wouldn't somebody buy it here? Right?
Yep.
Or why would somebody not buy it here? Because they probably don't know the power of this setup.
Morning, Jimmy.
Oh, hello, Frank.
Yes, I'm here. Yes. I thought I understood a bit of the setup one, by following you. But yes, it's still a bit tricky because my understanding is that you are trading with 5, so we look at with 4, and we identify with 3. Now sit and wait while with 4 happens. And then we'll look for a tight box and then place the pending order above the tight box for the wave 5. That was my understanding of it.
It still is that, but it's not just that.
Yes.
It's
I got the purple. Yeah, the purple, like here. Yeah, the screenshot you're sharing now. Yeah, that's right. This wave 5 looks perfect, and I guess that's what you call perfect setup one, right?
Yes, and you want to train yourself to be able to pick the perfect setup one as it happens.
Yes.
Like when I'm showing you now, using the bar replay function. So actually, let me just take it to one step here as well.
Yeah.
Okay, let's do it again. So when it was here, this is the original let's call it the bull flag pattern, or pennant, or whatever they call it in price action. So you want to see the peak of AO, the peak of the wave,
right.
nothing to the left, and then you wait for it to turn around. The first thing that would happen is that price would come below the green line, and then gradually the green line would come below the red line, and then it will start to go sideways. And meanwhile, if the wave crosses the red line, you are potentially into the setup 1 territory. Now in this, when it first happened, on this day, 25th of September, because this is a stock and I have a scanner for it, it would have hit my scanner. So it's very important to actually run the scanner, which you probably don't know at the moment. But this stream today that we're doing, it's about the stocks. But obviously we are using the setup 1. That's the setup that we use. And I think one setup, this setup 1 is just enough. One type of entry is all we need. Because everything in the AIMS strategy that we have is all based on setup 1. So anyway, so that's your first setup 1. This would be a little bit too early entry, if you know what I mean. Here the wave 4 is, minimum requirement of wave 4 is confirmed, but it's too early. But in this case it did actually work. So it's a good example. If you see a setup 1, you want to take it, and then you want to wait for it to do its thing, which it did, right? It did here. So if I draw target zone 1 for you on this, not that, I would do it from here, but that's not ideally where I should be printing it, but look at it. So that's the start, peak of 3 based on this. 4, if you went in there, it hit target zone 1. That's it. But it wasn't finished there. Started going down. Created another setup. Here I wouldn't take it because I would know it's a 3, 4, 5 complete. But even if you took it, well, it's a rent, right? It's part of the
That's
game.
right, yeah.
And then it goes sideways. Here it then gives you another opportunity, and that's where you can go again. And then it went up. Now this time, obviously this target zone does not apply. You have to change it again, because now this whole sequence is your wave 3. So this is 3, 4, 5, but this itself is your peak. So we look more at the pattern of the setup instead of counting the waves and stuff. Counting the wave is a background thing. But anyway, it goes like that.
Yeah.
And actually, I took it here.
Yeah.
And I'll let run. Hold on, I'll let you talk just a moment. Let me just explain this. So you see, hits target zone 1, but I don't get out the target zone 1 directly because I wanted to let it run. And then because it was going too far and it was in target zone, I started trailing. I got out there. Let me see, why is it not showing? Okay, it will show now.
Imi, can you hear me?
Yep.
You see, at the moment, I've been looking at the chart like this, and the problem I'm having right now, which hopefully this T2020 will overcome, is you see where you have this bearish red massive candle at there. You see, that's when I see this, I wouldn't have gotten. Once I've seen this, I wouldn't have gotten above the box on the slightly on the right there. I wouldn't have got there because I would get scared and think that this red behavior will happen again. So at the moment, I wouldn't know when this wave 4 will end. You see,
don't make decisions on one candle. It doesn't matter. One candle does not matter. We don't trade based on 1 or 2 candles behavior. We look at the entire pattern. So if this has happened once, this is actually, when this happens, we call this a B trap, because this is ABC correction, right? And once this happens, the important thing to look at is that when this happened, did it break the lows? So
Okay.
when you identify a wave 4, because wave 4 is a bearish wave, you want to know
Yeah.
what is the bottom of wave 4. So as you can see here, if this is wave 4, this was a bottom established. It came here again and retested it. So establish this level, the low of wave 4 over here. And now look at it.
Yeah.
Third time, even though it was a strong bearish candle, it touched it third time again. And now watch it again, fourth time. And that means that this is a very established support level for this wave 4, which would give you confidence that now this time when it breaks here, there's a higher chance of the breakout. So if I have an entry like this and I enter here and I have an immediate level here as well, which I'm worried about, what I'll do is that I will go half risk here and then half the risk over there. But you shouldn't be doing that because you're in stage 1. So you'll just go with your flow chart and take your trade and have your target point at target zone 1 or 2R, whatever it is. In this case, if you were to go long over there, your stop loss would be below this box. So your 2R was well before target zone 1. So in your case, in stage 1, you would just have a target point at 2R. For me, I would have a soft target point of that. I know that the potential of this trade now is about 1:3, so it's a very good trade for me to take. And then I will see how it develops, how the chart develops every day or every candle in your case if you're trading intraday. If the price then moves too fast away from the green line, then I start trading trailing candles. So in most cases I will exit on the green line, but if price continues to just go up without even a pullback towards the green line, and then it enters target zone, which is this, then I'll trail. Yeah.
So you see, if you were to hide the chart up to the dot,
Which one?
on the wave 4, the box of the wave 4. Yeah, just about there. Yes. Could you go back to there? Yeah, you see here now, I wouldn't have entered. Why? Because for me, the gators, they are not aligned bullish. So the red has not crossed the green has not crossed the red, has not crossed the blue. So I would still be scared.
Oh no, you're looking too minutely into things. Like you're looking at the lines and all of that. That's not what we look at.
Yeah.
We look at the overall picture. Like in this picture here, I'm not concerned about, oh, green is below the red and red is below the blue. If that was the case, then it would be a very robotic trading. That's not what I'm looking at. I'm looking at overall price that's going up, and then it starts to go sideways, and now all these three lines are inside a tight box. For me, that's a sleeping gator, and they are still above the purple. So that means, why the purple? That's because of this. If we go to the weekly chart, see this? My weekly chart is in a very strong uptrend. And so what I want to do is that when the 5 times higher time frame, like, you know, if you were on the M1, this would be your M5 chart, right? So when it pulls back, I want to take a trade.
Wow.
Yes.
I see.
That's what it is.
I mean, I would see that as aggressive, but okay, I see. I got the point now.
See, now you think it's aggressive, right, over here.
Yes.
But when you look at the daily chart, you think, oh, it's very sideways. And that's the whole
You see,
beauty.
but for me, I would still think that the wave 4 could, like you were saying this morning, could extend, you know, forever.
Yes.
So I was waiting for the wave 4 to, like, at least the AO to turn around and then try to cross the zero line. You see,
that's the thing. You have to keep the Elliott wave type of thought process that is famous in the Elliott world. It's like a 15-20% importance. It's a background thing, because we are not Elliotticians. We know that the market moves in a certain structure, which is Elliott wave type, 3, 4, 5. But the minutia or the nitty gritty of it, when people go into A, B, C, D, E, F, G, H, I, J, K and all that, when they start counting that and then it goes forever, that's just rubbish. We're not interested in that. What we need is a pattern that works, and this pattern happened to pick the best counts for you without you even knowing the very minute. When people try to exact their chart according to, because a pure analytician would believe that the market would move exactly the way the Elliott has predicted. That's not how it works, because the market has quite a lot of times, like for example over here, right, before it started doing something, there's a lot of noise.
Yes. Noise.
When there is less data and less volume, there's going to be noise, and then you try to justify it with Elliott wave count. It's going to be very difficult. So for us, what we do is we wait for the momentum breakout, and then we wait for a pullback. So every setup one is basically a strong trending market on the higher time frame. So here would be my setup, here would be my setup, and here would be my setup. Now, the reason I say that we are trend followers, even though our entry can be classed as a breakout entry, but that's a trick that people don't understand, and I like it that way, because people think I'm stupid, which is good, because I can do my thing. They're like, your breakouts don't work. I said, all right, thank you, no worries. It's every entry is actually a breakout entry, but when people say, oh, are you a breakout trader, what they're referring to is, do you actually look at ranges and then wait for a breakout? No, I don't do that. That's a death for me. What I do is that I want to find a strong trending market like this one, and then inside the trend on the lower time frame, I would go for a breakout, and this is our motto. Higher probability setups are breakouts in the direction of the higher time frame trends. That's the whole secret. So this is like this trade that we have taken. So for example, if I went long here slightly early, I would have paid the rent, not a problem. That's part of the game. That actually increases my chance of my second entry. So
Wow.
yes, and that's the trick for pullback entries as well. So if you were taking a pullback entry, for example, on this pullback, and the first pullback fails, then you must take the second pullback, and only the second pullback, not the third one. I don't mean the second pullback.
The second time.
The second time, not the third time. Why?
Yes.
Because the structure of the market is that it does the ABC correction every now and then. And it did that in this case. Anyway, this stream was actually not necessarily about explaining setup one, but it's good that you asked the question.
Yes.
I like talking about this.
Thank you.
What we want to do is to have to run the scan, because Sam is probably going to be falling asleep because the Australian guys are very late. It's interesting to have you, Frank. I will be running these streams nearly every day, but these last few days, just getting used to children, learning at home and stuff, so I didn't stream. But I think in the past few months, around 10 o'clock UK, like 2 hours into the London session, I always kind of stream for half an hour to 1 hour. So we'll do that.
Okay.
And if you stay with us, you will understand
Yes, please.
the
Yes,
setup
I'd
one.
love
Yeah.
to, yeah.
Anyway, let's run this. Yeah. Yes, Doug.
Oh yeah, sorry, I've just got to get off, mate. Is this being recorded?
Yes, it is, yeah.
Okay, I'll catch you later.
All right, cheers,
Thanks.
mate. All right, so Sam,
Bye, Doug. Hey.
look at the number of stocks it has picked.
791.
Now, I'm not gonna go through all of this, right? But you guys know. I mean, you obviously know Sam, but the rest of the guys and people who are new. So we have the scanner, right? You can find the settings of the scanner in your dashboard. You can set up your own scanner. I've designed this scanner which allows me to actually look for potential setup ones. So they're not always correct setup ones. I always look at them with the weekly chart up, or let me explain it in a way that I will always be looking at it. Whenever I run the scan, I run the scan, and then I will go through each of it one by one, and I would look for basically patterns like this. But I would also want the pattern to be correct on the weekly chart as well. So if you look at this pattern, it looks like a nice pattern, right? Wave 3 and 4, kind of gappy. But if I look at the weekly chart, the weekly is in a wave 4. I'm not interested in a chart like this. I'm probably more interested in a chart like this, where weekly is going up, right? It's recovered from the pandemic. I probably add this. So this is first red bar, so that means it's probably hit my scanner for the first time. And then I have a watch list for this. So this watch list is for the chart, for the stocks that are between $1.50 to $20. And then the other criteria that is listed in the dashboard, you will find out, why I have this. And those parameters will kind of help you understand what a setup one is as well. If you pay attention to that, why do I have those settings and how am I able to actually scan? I think, Sam, if you think about it, this is one of the things that we always wanted. The ability to actually scan the market when it's a setup one.
Absolutely, yeah. And I think Steve also tried, Steve tried coding one indicator.
Yes.
For the hunt, right? Something similar, but it was mainly for MT4.
Yeah, it was mainly for MT4.
Yeah, but this is amazing. Like you can use the same filters for forex screener too.
Yes, you
and
can.
Crypto.
Yeah, of course.
So they got 3 options there in TradingView.
Yeah, but the thing is, with those markets, there aren't many. Like there are, with forex, you have what, 30 or 40 combinations. So you can easily look through them, even without a scanner, right? You just quickly scan through them and see if it's a setup one or not. But the thing with this is that this scanner picks the stocks that have the higher potential to actually break out, like the one that I was showing. This one that we recently, this was one of my real trade. Over here on the trading view was just for the show, but obviously on the interactive broker account, the one with Tesla, I have this as well. So we had I think about 20 stocks of this, but obviously on this 20 or 30 there was, and this I've taken 1,000 stocks. Why not? Feel good. But the important thing is realizing this, right? The buy was at 50, so it's here, and then trail the candles, exit it at 77. Pretty good trade. And so this would have entered my scan. This would have hit my scan over here, and then it would have gone out, and then it would have hit my scan again here. So if it hit my scan, then I would hit my watch list. So I'm going to cut it short. I'm not going to go through the 191 because I know that most of them I've already seen, right? Most of them I have already added to my watch list. So shall we go through the watch list then instead?
Yep.
Check this one. See, ACRS, yeah, health technology, right? It was a beautiful setup here, 16th of December. And I think it hit my target on this spike here. So I wasn't sitting through this at all. Now, the weekly stock was weekly chart was a little bit iffy on this for me, but when it hit the scanner, it was above the gator and the purple. So I thought, okay, looks pretty good. So basically, this one I can actually now, delete it from my watch list because I don't need it. I've left these ones here so that when we do, this watch list thing, so I can then delete them in front of you. So look at this one. This is again another one similar to the, see, this is not even, oh yeah, this is the American Eagle one. I really like this one. This was one of our real trades as well. So first position taken here, then added on when it broke out. I mean, the add-ons were a little bit wrong here, I would say, because we should have waited for the pullback If we waited that would be nice. And then we exited here, and then we exited the rest of it, trailing the box. Can you see this? So weekly chart is pretty good. Probably if it might probably hit the scanners again. But we can now get rid of this. I'm going through one by one. So this, we can delete this one now, right, Sam?
Yep.
Okay, this was a pretty good trade over here, which I haven't taken, I think. I mean, how many can we take?
On now.
We need more money. Okay, so here's another one where your wave 3 is created with some huge spike.
Good diversion.
Yeah, it's not really the most attractive chart at the moment.
Yeah.
If you look at the weekly chart, I mean, this stock used to be all the way at 42, and now, you know, the market has fallen out of love with it. Anyway. Okay, this was a nice one as well. We took this. So this is the type of stocks that we want. See, this is all the stocks that we saw today are like turnaround stocks. They have been in a bearish market for years, and then all of a sudden, the pandemic changed everything for them. So this one is done and dusted. We'll get rid of that. Another one that we've actually taken. First entry here, look at this. See the little blue arrow? And this is the type of stocks that I'm interested in, you know, the one below $20. So goes in, get out, get back in, add on, wait for this pullback, and then when it goes up, took our profits. This is the type of trades that we want to take throughout this year. So I'll just, well, probably again a setup now, right? Because we have a peak and a cross of zero line again.
Yeah. Might set it up again.
Yeah, so we'll probably leave it then.
So this is the thing. That's why with stock, it's not good idea to count the wave, like as in number, and rather than rather focus more on the pattern.
The pattern, yes, yeah, I agree.
Yeah, because it keeps going at times.
Yeah,
you know?
if we look at Tesla, for example, then we would have stopped trading ages ago, right?
That's right.
There's
Yeah,
so many
you are
waves.
in that mindset of the 3, 4, 5.
Yeah.
That was Frank earlier. He was asking, but for stock, it's different.
Yeah, look at this.
Same goes for the Amazon, right? Keeps going in one direction.
Here, then here. So if you're looking at the weekly chart, what do you see? You see a very strong wave 3. Inside the wave 3, every time there's a 2 or 3 candle pullback, and that's the pullback method. So if you can find a stock or any market, any chart, which breaks out of its long-term consolidation, and then every time there is 1, 2, 3, 4 candle pullback, you can see that both of the, you know, I'm moving my cursor on the chart on the left, but you can also see it on the chart on the right. You can see that a 3 or 4 candle pullback, which is a controlled pullback, not that it comes all the way down, you know, just the in the stock world or the price action, it will be called a bull flag, right? It comes here, sets up as a setup 1. Then there's a little complex type. I think we lived through this, if you remember, Sam. We were thinking about this. We were talking about Tesla around all of this time. And then see, first opportunity, rent. Second opportunity, not a rent, but it gave you the scares, right? You go in, you had to stay there because this was your lowest point. You stay there, then it comes down and bang, it starts. And that trade actually has no exit so far.
Yeah. It's massive.
Yeah, I still have 10 stocks on that. Let me just go back to it.
It's pretty good trade.
My average price is 444, so it will be here. Yes. So from around this level, because it's 10, the maths are very easy. It's a real stock, so it was 4,400, and now it's sitting at 7,000 780 or something like that. So almost double.
Nearly 100%. Yeah.
I wish I had £1 million and I invested in it, right? So I'll have 2 million. But then if I had that, I'd probably wish that I had 10 million. So that could be 20. It just goes on, isn't it?
I was just trading setup 1, eh?
Setup 1. That's it. Warren Buffett trades setup 1 on a yearly chart, probably. You see, he goes, he invests in companies that has intrinsic value that he can see, but the market can't. So he gets it cheap. So which means that it shows potential on his chart, his mental graph. It has potential. It's going to do a wave 3, but the market doesn't, and he buys them anyway. That's a different thing because it's long term and all that. And anyway, this was a very, very good trade. Look at the weekly chart, right? Breaks out of its consolidation. There's no that downward move on this one, right? It was sideways. It breaks out of it, pulls back. Look at this. 1, 2, 3 candle, right? Nice, lovely 3 candle pullback creates a beautiful setup, sleeping gator. And Frank, if you're listening, if you would filter that trade, the one that you were talking about where the gator wasn't correct, that's fine. You can do that as well. If you want to wait for only these type, then fine. Look at this. This is a beautiful setup. I actually went in early because I was just excited about this. So we went early here and then added the rest of position here and here. Could have added here and here, and then it had a parabolic move, so we quickly got out. And this is my plan. This is what I want to do with the stock account. Exactly this. These 3 charts that I showed you, EXPI and this LQDT liquidity. And the reason why I'm going for the stocks between $2 and $20 is because these are the ones that have the potential to move when the market takes interest in it. They move a lot more because they have a lower float. But I also want to invest in the the high beta stocks, the one that have high volatility and moves, like Tesla and all of them. Why not?
So that's something you're gonna trade during the US Open, right? Like Tesla or Amazon or something, like day trading, right? For those stocks.
No, if I started day trading, it's most probably going to be small caps. Basically, it's going to be a mechanism of between $1.50 to $10, those stocks, and then I'll be looking for gaps. So I'll run a scan, and I will go for gaps. So I'll explain that strategy some other time. But yeah, one can do that. What you said, Tesla, Apple, and those, they can be traded exactly like the way we trade DAX, right at the open, and then wait for setup 1. Let me just bring one, okay? Let's go to Tesla first. Right. Suppose we
get lots of setup 1 on M5 or
oh yeah, again and again.
Or M1.
So like I think yesterday. There will be plenty of opportunities. So if it sets up on that day, you trade it on M1. So it hasn't been beautiful. Let me just get rid of the pre-market data. See, within these pullbacks, you will see setups. And then we have, I think these are some of the stocks that people trade. And you will find some beautiful setups on these.
Yeah.
See this one towards the end yesterday. I set up 1.
Yeah, it was nice.
Look at this. I set up. So this was, oh yeah, this is pretty good. Like on Apple yesterday, you were
very nice setup.
Nice pullback here on the M5 and on the M1. You have a beautiful setup, and so I think you traded it. You could have traded it for like 200 points. if I do this correctly, let's suppose you traded it here. You had your 2R hit very easily. Let's suppose you waited through this little pullback and exited on this. You had a nice 1/4 trade on this. Check that out. Beautiful. So yeah, these ones can be traded. I mean, this on a $25,000 account, you could easily trade this, because that's how much you need for US stocks. If you have a US, broker and stuff, they want you them. Otherwise, you won't be able to trade more than 5 times in a week. They have that PDT rule, it's called pattern day traders. Right, so let's go back to our, I'm going to speed up now, okay?
Yeah.
I'm going to speed up for the scanner now. Look at this. You were long on this, weren't you? Look, it hit the peak.
Yeah, on my paper account,
Yeah.
and it got 2R.
Okay, brilliant. Look, it's hit.
So made about 30 grand on that account.
Yeah. Check the Scooby on the weekly and the contracting box. Look, box going up, box going down, nice funneled, and then because it's extended, this time it only broke out and hit the peak of 3. That's a pretty good trade. Pretty good trade on this as well. That's the Apple.
I'm taking a lot of setup 1 on paper account just to build the confidence and see how it goes.
Yeah, keep taking them.
Some of them I got it on live too, but then as you said, you need, you always run out of money when you trade stock.
Yeah, that's the thing. You have to be very choosy, selective. Don't invest. Like if you can take 4 trades on your live account, for example, right? Then you don't want all 4 to be in, say, the same sector. Like you have biotech and all 4 of them are there, then that means you are risking too much. But this year everything's moving, so just trade the bloody setup 1. So this is not a very good setup 1. Why? Because we have seen a very, very strong move on the weekly chart, and this seems to be that the market is now exhausted of this move. The too much investment into it. People are taking profits there, and now it's consolidating sideways. Purple has entered. This is a setup 0. We want to stay away from it, but I have my stop loss on this here. Doesn't really matter to me. Not my real trade. Not a very pretty chart, this one. We'll keep it as it is for now. Next one, this has already been traded, but I've left it because I want to delete it.
Timmy.
Yes.
Sorry, the setup 0. I did hunt for it, and it wasn't crystal clear for me. Is it when
the purple is mingled with the
gator?
gator? You want to stay away from these.
Okay.
You can trade them later. Once you get more experience, you will know which ones to take.
Thank you. Yeah.
See, this over here was a setup 1. We took it there, exited there. But I've still got it. I'll just delete this now. So the purple labels, okay, so the ones that you see with the blue label are the ones that, so I have this over here, blue list, purple list. So the blue list are the one that I am long on, and I'm only taking longs. Basically, it means that I'm trading these ones. And then once I have exited that trade, I color them purple. So I know that I've actually traded this. That's just a little trick for trading view. This was a setup with a big box. I haven't taken it, actually taken it, and we've gotten out of it. Next one, I'm going to go quickly now. This was a pretty good setup that, could have been taken 18th of November. Look at the beauty of this, Sam. Look at the beautiful 3 candle pullback, right? 1 candle pause, which created the setup, and all you had to do was buy this at $15. Let's suppose you bought it for 100 stocks. 100 stocks. How much would it cost you? $1,500? right?
1500.
And now it's doubled. You didn't do anything. You just bought it and you're waiting. That's it.
Yeah.
So I will actually delete that now. I don't need to be in the list, but I wanted to record it, so that's why I left it there. PBI, this one, and this one. Okay, this one. So sometimes this would happen as well. That's why I have this as well. You're waiting for a setup, but these things sometimes just go up there. Now we're not interested in this, so we'll delete that. This one's now not a setup, so we'll delete this as well. Yep. And the reason it's not a setup is because 3 and 4 has happened, and now it's broken out and came back. It's just ugly now, so forget about it. That's again another one which has a B trap. So it's like it's ABC, which increases the chance now that this strong breakout now. So we've gone in and we'll see where it goes from here. We'll see what it does around this level, and then we'll see what it does around this level. But if it goes to that level, we're already successful. Another one that triggered. So the weekly chart for this one is not really attractive because it's in a downtrend and 3 and a 4. But the daily chart is going strong, so we'll see where it goes. This is the one that triggered here on the 23rd of December, and then we added on to it on the 6th of January. The weekly chart is not really beautiful, but if you focus only on this bit, so there's a thing called catalyst. When something happens underlying market, either in the sector or for that company, there's particular news, then that changes everything about that stock. So whatever happened before that really doesn't matter. What matters is those new investors who have invested in that stock or that company because of that news. So that's that price action that indicates this. So this is what it is. It came up, came down. You see, 1, 2, 3, 4, 5 candle pullback. It's converted itself into a nice setup one. We are long, and the trade is already successful. This, we can move this stop loss like easily to this, or actually take some profits here now because it's hit the peak of 3. So that's the strategy. We want to actually always take profits when the stock hits the peak of 3. We want to take some profits there and move our stop loss to either better location or break even. And if we do this, now that we've taken profit from it and we can't lose, it's a winning trade, it will be very, 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 very easy for me to just let it run. So suppose if I've already taken half the profit and my stop loss is a break even, I can actually ignore the weekly, the daily chart from there and start actually just monitoring on the weekly chart, because this could turn into something, like if it really turns into something, it will go. But these are not those type of stocks that actually go consistently, but sometimes they would, because if we invest in those type of stocks, like Tesla and them, they have that ability. Not just Tesla, but Apple and Amazon and them. Those are big companies, and once they start going up, they just constantly go. If the market is overall bullish, you'll just stay in that. Anyway, here's another one triggered yesterday.
Amy,
yeah.
Before, can you just go back to that chart before, the CFF one?
Mm-hmm.
Now, on the weekly chart, do you take any consideration for the fact that the market is below the purple line, or do you not really look at the purple line
I
on
do.
the weekly chart?
I do. I want the weekly chart ideally to be trending strongly like this. I want the weekly chart to be like, if you look at this chart here, I want it to be here. I want it to be this, like this. And then inside this pullback is when I want to trade. But this market had particular news on it, which changed the way, this company. I don't know if I can find it here. I don't really look at news, but for this one, there was something that I was reading, and it changed. So if you look at it, this stock was in a downtrend, but then around September, it changed. Something changed in it. New investors came, and then there was a pullback. So the weekly chart for this is not really good. I do consider that. So this was a slightly different decision. But if you look at the daily chart, it was a perfect setup one.
Yeah, thank you.
So yeah, the weekly chart purple or the image is a guideline, not a rule. Whereas on the daily chart, the purple is the rule. And, you know, it has to have a peak of 3. It has to have a cross of 0 line. It has to have a tight box. Purple has to be correct. On the weekly, it's a guideline. So if you look at this one, you see the weekly chart is already open. Purple is correct. And there's a pullback. So this is the one that I like more than the other ones. So this one's already fresh entry. Yesterday it got triggered. Another fresh entry on this one. Should have taken it here. But obviously it was 29th of December. I wasn't looking at these things, so took it here anyway. We'll see how it goes. So see, here's an example of a B trap getting in and out. So got in at 21.39, got out 18.15. A loss is a loss is a loss. It will happen. And most of the time you'll get B trapped, which will increase the chance of actually you know, taking it again. But if you look at this one, now it's not a setup 1 because, you know, it's a setup 0. I can actually now take it off my list. The purple is not correct. And in the first place, if you look at it, the weekly chart was extended. So when the more extended it is, the more you have this chance of ABC, and then it's disappearing into a very long sideways market instead of a nice, lovely trade. But anyway, that's what it is. Okay. Have I discussed this one? No. Okay, this one is now triggered yesterday, but the weekly chart is not really pretty. If you look at this chart, it's a very good example. You have so many levels to the left, right? You have all of this. So not really an attractive setup 1 for me, so I won't take this. Okay, this is the one where I have just messed up with a quick entry before it's set up, and the weekly chart is not really good, and then stop loss was triggered over here below the box. Good that I'm showing those as well. Okay, very good trade, triggered yesterday. Weekly chart is not the best, but if you look at the current price, it's pretty smooth. Breakout, pulls back, you know, 3 candle pullback here. Really nice setup 1. It's already done one setup 1 here. Look at this. It's a beautiful setup 1 here in November, and then you would exit here, and now it's going again. And because it's second time, when you get in here, and the fact that it's hit the peak of 3, ideally, let's suppose if you bought 2,000 stocks of this, which should be worth what? $10,000, right? For me, an IG index, I think it will cost me just £500 or £1,000 to hold a stock of this value, right? Or maybe £2,000. So 1:5, yeah. Now we should take half the profit here and move stop loss to the entry. So initially I took it here at 480. This is kind of like the early entry, where you want to make the early entry and you have your stop loss below this, and then when it does eventually set up and it starts to break out, then you add on the rest of your position on this. So the rest of it is taken somewhere up there, 553. So the average position would be somewhere around here now, 490 or something. Now we can take 1,000 stock off this over here, move stop loss to break even, and let the rest run. If we did that yesterday, Sam, we would have taken some positions.
Yep.
But this week I'm still not taking position on live account, and it's going to be next week. I will make video of every entry that I make onto the account.
Okay.
I want to do it, you know, for personal reasons. I want to have it recorded every time, so that I will share with you guys as well, if you are interested.
Thank you.
Another one, not a very good weekly chart, but the daily is showing something. CBAT was
Not a great one. Yeah.
this was one of the excellent trade. Took it here, then there, and there. Took some profits, and then it went up. Beautiful trade. 3 to 11. Another new trade. You have a B trap on this, and then ABC has happened, and now it's going up. So something that you could, anyone can, if it opens in the same area today, it can still be taken. But it has levels to the left, so probably not the best. This is not bad. It's clear levels to the left on the weekly chart. I think this can still be entered at the open today. We've already seen a B trap. If you can see this, Frank, you have this B trap, which increases the probability of the second breakout to be successful. Because we've seen the breakout and price still did not break below the low of wave 4, and now it's going up. So if it breaks this level, it can even go further up and hit target zone 1.
Okay.
This does not look very attractive to me now. It's done a 3, 4, 5. I'm just going to delete this one. Look at this bar. I've got so many charts to look at. Look at this. Oh goodness. So when you have that many, you don't really need to look at new chart. But still, I'll quickly go now. Look at this beautiful setup 1 that I haven't taken. Entry would have been here. And the reason I think I didn't take it because it gapped opened, right? So if you had your pending order here, let's suppose here, it would have opened it there. But that's fine. If your pending order got slipped there, if you wanted to, if you want to make it like better, then instead of pending order, you could actually wait for the open. Mostly during pre-market, you'll be able to take your entries. So if you see that it's already gapped up too much, then you just leave it. One more. This one that I did not take, it was too early. You see, did not give me a chance. It just broke. But look how it's going. New trade taken on this one. A pretty good weekly chart on this. A nice pullback. ABC, wave 3 and 4. We are long. Okay, this one broke out, but we still got in at 979, and still it went up. Look at that. That's because I saw this breakout on this, and there was some catalyst news about this company, Lionsgate Entertainment, and nice 3 and 4. I mean, the initial entry at 880 would be very nice, but we took it at 917 anyway. It's going. Another one example of a gap open. It gapped up so much that it's hit or target 1, which is usually the peak of 3. So it's already hit peak of 3, and so don't want to mess with this one now.
It's gone, yeah.
Just a moment. Okay. Yeah, this is the an example of you had to like. Yeah, I think if you had a pending order on this one, it wouldn't have slipped too much. It would have just been 1330 instead of 1320, and then a very good day after that. So, yeah, pretty good, pretty good. You see, start of the year, you know that pattern, Sam? Top of the hour, top of the session, top of the month, top of the week, yep. Top of the year. This is top of the year. So you see how many stocks are breaking out because it's top of the year.
Top of the year.
Yeah. Look at this one. You know, just on the 4th of January, if you invested, say, 10,000 on this, in a couple of days, you're $2,000 up. It's gone up from 1270 to 1420. It's already hit your target 1, and it's going toward your second target. You should actually very easily close half of it and put your stop loss here and then forget about it. You know? I like that. Okay, JDD. I'm just going to go quickly. See, so many of them.
So, Emmy,
Yep.
when you're seeing so many, is there other factors that you would use to determine which ones to actually jump into? Or do you just think of rank them based on,
if you want to get fully invested, what you want to do is that if you're invested up to a certain limit, let's say 25% of your stocks are in that certain sector, right? Like the biotech. Then you want to make a decision whether really you want to take more risk in that sector, and which would have been for this last year and continuing now. It would have been, yeah, why not? Take more risk in that because it's obviously going up. Or the other approach is to just blindly keep looking at stocks and keep looking at charts and keep taking trades up to the max limit of your risk. Suppose you want to, if you're trading stocks without leverage, right? You can be fully invested. It's not a problem, as long as you know what is your max risk for that stocks. So, for example, you have invested in 10 different stocks. If they are in the same price region, let's say all the stocks are between 5 and 10, then you would have taken the same amount of stocks with kind of similar risk. So if you take 1 or 2% risk per stock, then obviously you can't invest more than 4 or 5 stocks unless you have turned some of them into profitable ones. Right? So, for example, if I have like 3 stocks in which I have, done something like this, right? Or let's say, what was the example? Over here, like for example, I invested in this. Now I've taken half and my stop loss is a break even. This is now out of it. There's no risk in this. So I can now invest in another one. Yep. Okay, guys, I got to go. So
let's continue.
Yeah, let's do it tomorrow. Cheers.
Yeah.
Bye now.
All right. Good night. Bye-bye.
Thanks, Amy. Bye.